Okay, I think we are now live. So good evening, everyone. Welcome members, independent members, officers, and other guests. Hopefully you can all hear me okay, but this is effectively the first hybrid session for Audit Committee since the regulations changed. So we've got a core of members here physically, and we've got other members virtually. And I think members of the public and press, they're available to view all of this on YouTube. With regards to sort of just the logistics of how to run the meeting, if members here could raise their hand, and if members virtually could raise their virtual hand, then we'll come around you. And just for those of you on Zoom, I think the chat function has been closed off for this, so we won't be using that. Members here, just a gentle reminder about social distancing and wearing your mask when you're not speaking. I think just as chair, I'm just speaking quite often, so I've decided to take mine off. And finally, just in terms of logistics, could officers and members, particularly officers, introduce yourselves when we come to you? And then just in terms of this evening, could I firstly welcome Winston, Councillor Vaughan, whose first audit committee this will be. So a warm welcome to Winston, and we look forward to working with. And then just finally, before we move on to the agenda, just a word about what we're trying to do this evening. It's as the clerk called it, a finance special. So we'll be looking at the draft audit plan, looking at the timelines and the contents of that plan. And we've got guests from EY to talk through that. We've got a look at the annual governance statement, where we're effectively been asked to sign off a draft version of that and provide comments. We'll be asked to look at the going concern report before effectively jumping into the draft statement of accounts. And we'll be asked to effectively give the green light to hand over those draft set of accounts to EY so they can start the internal audit process. But without further ado, in terms of the agenda, are there any apologies for absence?
Yes, Chair. Apologies for absence have been received from Anthony McColmont. Sorry?
Lateness.
Oh, he'll be late, sorry. Apologies for lateness from Anthony McColmont. And also Councillor Harvinder Singh Verdi. He's also on council business, so he may either be late or absent. And independent member Mike Reader has indicated he's not able to attend.
Okay. Are there any members aware of any other apologies? No, I don't think so. Okay. Declarations of interest. So under the regulations, this technically applies to those who are present physically. So are there any conflicts or declarations of interest to declare? No. So item 3, which is the minutes, we're asked to approve the minutes from the 22nd. I've just got one suggested amendment from Councillor Pauline, and for various reasons it's got to be raised by myself physically, and that suggested amendment is the item 2, declarations of interest, that the minute be amended from the councillor stated he would not speak on those agenda items to the councillor stated he would not comment on the youth offending service or on certain issues within the counter fraud update. So that's a suggested amendment. If someone's willing to second that amendment, who's present here? Yes. So I'll take that from John. By members present in the room, may I see a show of hands as to whether that amendment is agreed? Yeah. So that amendment is agreed. Okay. Are there any other amendments to the minutes? I don't think there are. And in which case, could we please give a show of hands to say that those have been agreed for those members present? Okay, brilliant. Actions log. So we're asked to know the contents of the actions log. And if there are any questions on this, I think I had one, which is AC 030 on the SIL money section 106. and it says Councillor Blaney to inform officers to decide on content of the report. Could I ask Councillor Blaney if you wouldn't mind following that up with officers so that we can get a feel for what that report looks like, but we'll leave it open for now.
Yeah, I've indicated in writing that any delay is my fault, not officers, but I'm pleased to say I have now arranged an appointment to discuss that in the next couple of weeks, so hopefully there will be progress on that. Thank you.
Thank you. I was just looking to see if there are any other actions that could be closed. I think effectively AC 081 could be a duplicate of that same action that you're referring to, Daniel. So I think we can close that one. I think after today we might be able to close some others, but we'll for example, the draft AGS statement and so on. But I think that's broadly it for now, unless members have any other views of actions that can be closed or queries about actions.
Yeah.
Yeah.
I'm not hearing you very well, so you may have tackled it. Can everybody hear me now? Sorry, what with hearing aids and this thing, it's too much. AC 084 mentions three of us and Fiona to work with the Corporate Director of Education and Children to shape and determine the level of content in the next report to the committee. When was it coming back? Because we haven't been able to organise that there. I can see Narissa's on the call and Fiona.
I'm expecting the report in October.
Oh, so we've got plenty of time to do that. It's just flagging it up that we, to remind us that we need to do that.
Sure, thank you. I don't know if you quite caught that to those listening virtually, but the action around members working with the Corporate Direction of Children's Services for the next report, that's due in October. So for those of you that are going to work on that, there is a bit of time there. But we can actually update the dates of the action, if that's okay. Anything else on the actions today? Okay, moving on to the first substantive item, which is the draft audit plan, and in a second would appreciate turning to David to give an overview of that. Just in particular, just to highlight, I think where our questions might relate, it's probably the when of the process and some of the what and how the internal audit will take place, and we will come on to that. And David, if you could also refer to the rule around Janet and extension of terms under the PSAA requirement, that would be helpful if you wouldn't mind explaining that in your introduction. Thank you.
Thank you, Chair, and good evening, everyone. Yep, I'm afraid Janet, the partner on the audit, has sending her apologies tonight, but I'm joined tonight by my colleague Chloe, who's worked on the Newham audit for a number of years as well. I'll take you through the audit plan for the London Borough of Newham, and then take any questions. And then Chloe will take you through the Newham Pension Fund audit plan, and again, we'll take any questions that the members may have. So the audit plan sets out our planned approach to delivering the audit work, the external audit work on the Council's 2021 financial statements, which you'll be looking at in draft version later tonight. And that's to inform our audit opinion on whether those statements give a true and fair view of the Council's position at the 31st of March. It also sets out our work that we do in relation to our value for money work. So what I'm going to largely focus on is the key messages outlined in the overview section, but I'm more than happy to delve into other areas in more details to answer any questions that you may have. So if I start on page 39 of the agenda pack, that's page 5 of our report. So this table sets out the areas of the financial statements where our audit planning procedures has identified a higher risk of misstatement. So we're going to do some additional work there. It sets up the type of risk, whether this has changed in comparison to the prior year, and then provides a little bit more detail on the actual risk. Now, section 2 of the report provides further details on each of those risks. If I go through those risks, so the first one is misstatement due to fraud and error. So this is basically the risk that we recognise on every audit, that management has the ability to override controls to manipulate accounting records. And there's some standard procedures that we're required to carry out. And part of that is to assess if there's any specific areas for heightened audit interest. And for Newham, we've concluded that it's the misclassification of expenditure and specifically inappropriate capitalisation of revenue spend. And that will be similar to what you've seen in previous years' audit plans. The second risk there is in relation to valuation of plant, property and equipment and investment property. So the council has some significant values of land, buildings, surplus assets and investment properties on its balance sheets that will be valued based on a depreciated replacement cost or existing use value. And the assets are fairly diverse in nature, and the council will engage a valuation specialist to do that work. So we therefore identify that as a significant risk, and part of our procedures will be to assess the capacity, the qualifications and the ability of the council's expert to do those valuations. We'll retest a sample of those valuations and use our own auditor's expert to do those procedures. And again, that's the risk that you'd have seen in previous years' audit plans. The last risk on page 39 is council dwellings, kind of similar to the previous risk. So these assets are more obviously similar in nature. They're valued using a beacon methodology, which is driven by market information, which includes, to some level of judgment. So we therefore apply a higher inherent risk, where again we will carry out procedures to assess the beacon methodology and approach, and sample test some of those beacons that have been revalued in the year back to market information. Again, a risk that you'd have seen in previous years. If I move on to page 40, the first risk there, disclosures on going concerns. This is something that was kind of new in the previous year as a result of obviously the pandemic and the uncertainties that was throwing up. So it's an interesting one because obviously the presumption that a council will continue as a going concern in the foreseeable future. However, the auditing standards require us to look at management's assessment, to look at that, consider the disclosure that's then made in the financial statements. And I think there's a paper later on today's agenda that will look at going concern. The next risk on that page is the pensions liability valuation. So again, this is a risk that you would have seen in previous years. The current deficit that you'll see within the financial statements is a significant value. And it's both material and sensitive. So small changes in the assumptions included in that can have a significant impact on the liability that's presented on the balance sheet. So the council will engage an actuary to carry out that valuation. And similar to our work on property valuations, we'll also engage our own actuary to kind of test and assess those assumptions and look at those reports. The last two risks on page 40 are both new. So the first one is COVID-19 grant income, and that essentially recognised the significant volume and value of new grants that the council will have received in 2021. So the code of practice on local authority accounting will require the council to assess, first of all, is it an agent, is it just passing the money through, or is it a principal it controls or has some influence over that grant money? If they determine it's a principal, they then need to consider whether there's any conditions associated with that grant, and that will define the accounting treatment. So with so many new grants coming in, there is a risk that if the accounting treatment was wrong, it could lead to a material misstatement in the accounts. So we identify that as a risk, and we'll be doing some additional procedures around that. And then finally, the new general ledger. So this just reflects the change to the council's general ledger in the year. So there's a risk that data could have been modified or lost in transfer. So we will do procedures around that to mitigate that risk. If I move on to page 41 of the pack, that sets out our materiality levels. So it's got our overall planning materiality. It's got the performance materiality, which is essentially the value to which we'll audit the accounts. And then it sets out a value above which we'll report to you any audit differences that we identify. The one thing I just wanted to flag there is the change percentage to the planning materiality. And I think this is a good news story. It kind of reflects the progress that the finance team have made over the last few years in terms of the improvements to the accounts, but also in terms of the stability that we're seeing within the organisation. So that's been increased to 1.8%. That is now more in line with what we would expect to see for a council of Newham's size. The performance materiality is held at 50%. That could potentially go to a maximum of 75%, but we would only do that if essentially the level of audit differences that we were identifying was pretty immaterial. Page 42 of the pack just sets out the audit scope. I've already mentioned that this will cover the opinion and value for money work, but it also includes work that we do on your whole of government accounts return, where we report our work to the National Audit Office. On page 43, we've got the value for money section. Now, we would have reported previously to the committee that the National Audit Office issued a new Code of Audit Practice in 2020. The most significant change coming from this new code was actually in relation to value for money. So we're still required to consider whether the authority has put in place proper arrangements to secure economy, efficiency and effectiveness in its use of resources. But actually now there's more of a focus on gaining sufficient evidence for us to form that evaluation and actually to draft a commentary, which we then essentially report back to the council. And that will also include identifying and reporting on significant weaknesses in those arrangements, which are now reported by exception in our auditor's report. That commentary will be reported back via a new report, which is called the Auditor's Annual Report, which will essentially replace what was previously the Annual Audit Letter. So in section 3 of the report, we set out a little bit more detail around this, and we also identify the 2 risk areas that we have at the moment. And that's in relation to the qualification issues that we issued in 1920 in relation to value for money, being around the Ofsted inspection findings, and also the governance issues coming out from the Internal Control Commission report. Also on page 43, we set out the timeline. I think in the covering report for this agenda item, it set out that that had been moved back from the 31st of July to the 30th of September. We are currently planning to sign off before the 30th of September. Just moving outside of that overall section, so on page 62, we set out the group element of the audit and specifically the scoping. And you'll see there that we've identified Popular Living and Future New Home as our specific scope components, as they have individual accounts, which is property, plant and equipment, and investment property, which is above our performance materiality level. So for those, we'll issue group instructions, we'll meet the component auditor, and we'll also carry out a file review of the component auditor's file. For the other components, we assign what we call review scope. For those, we'll identify their single entity accounts, which are subject to a separate audit by a different firm. We'll carry out analytical procedures, and then we'll check the consolidation procedures have been carried out. I think the only other thing I was going to just point out is on page 64 in relation to the audit team. You're seeing similar names there, so we're maintaining some good knowledge of the council and good continuity in relation to those services. So happy to pick up any other questions that members may have.
Could I just actually invite officers? I didn't know if you wanted to follow up on any of those points before turning to questions.
Thank you, Chair. I'll just cover a couple of points we make in the covering report to the audit plan. And to introduce myself properly, I'm Andrew Ward. I'm the Assistant Director of Finance and Transformation here at London Borough, Newham. So I just wanted to sort of just highlight the timeline now. So the deadline for approving the audited statement of accounts is the 30th of September. That audit, as you've sort of seen, will be progressing from June through to September with the audited accounts presented to the audit committee in the last week of September. We've also sort of just listed in the covering report the fee for the audit. So the base fee, I'd like to point out, is the same as the previous year. Newham is obviously a large London borough with several complexities, so there are additional fees, but those are lower than the previous year. Well, yeah, we're very much sort of looking forward to a successful and productive audit with our EY colleagues. Thank you, Chair.
Thanks very much. So just in terms of opening it up to questions, we'd definitely like to make sure there's enough time as an opening section on the new risks, which are, as David described, the COVID grant income and the general ledger. I don't know if any members would like to start with a question around those initially. Yes, I'll go Neil first.
Well, I'll take Winston because I was on value for money, but if you want to structure that.
Start on those risks first, the COVID grant income and general ledger. Great.
I seek clarification, Chair, on the letter dated the 9th of June 2021, and it's by Jeanette Dawson. And my query would be in the third paragraph, where it says this report is intended solely for the information and use of the audit committee. Now, the question here is, I know this is a council document, but supposing there was a freedom of information request, how does that tally? Would that be met?
I think I can probably broadly take that one. I think now that it's part of the published agenda materials, it's in the public domain. So this document, although it's intended for our use, it's in the public domain, so it could be shared as part of a FOIA request. Is that right? Yeah. But just in particular on the risks, I was just keen to start with some questions around those two risks. Is it?
That later.
Yeah. So, I'm asking for questions on the
new risks.
Yeah, is that okay? Shall I go with yourself, John?
Yeah, thank you, Chair. Now, I just wondered about the question of data loss, changing from one system to another. Is this a risk that's usually run? And are you confident that you'll be able to prevent any data loss when you do this? When you look at this change?
That's probably looking to officers for reassurance around the ledger cutover. Yes, Conrad or Menia, thank you.
Yeah, would you like me to kick this one off perhaps? I mean, so the Oracle Fusion project went live in, I can't remember the exact date, but sort of September, October period. And as part of that go live, of course, one of the key reconciliation tests that you do in order to switch over is precisely that reconciliation from the data in the old system to the new one to make sure it is properly represented. You know, in fact, we probably had about 4 or 5 trial runs of that through the project management process, which is what you would expect for a large project like this, to sort of make sure that all works as intended. Of course, one would expect the external auditor to want to verify that as part of their audit, but I'm confident that though I understand why it's listed as a risk in the audit plan, I'm very confident in the work that's been done and will be available to demonstrate that there was no data loss at all in the old system and the new.
Thank you. And perhaps for David, are you able to share any recent updates as to your testing on that, or is it still a bit too early in the process for any sort of interim results?
Yeah, no, we're pretty well progressed. So we use analytical procedures to essentially map the codes from the old system to the new system and check for any differences. And I think we're pretty well through that, and we're not identifying any significant issues at this point.
Okay, that's good. Thank you. Thank you. So I did want to just start with those, but really just happy to open it up now. Can I go back to you, Neil? Was it on VFM?
No, you wanted risks, I thought.
I think I'm happy to open it up now.
I did a COVID one on the risk and then structure. So on page 17 of your report, 51 of the main agenda, there's going to be a sampling of these grants. It seems that, that's going to be a difficult process because we've been, in meetings elsewhere, but predominantly in terms of elected members being on the receiving end of sort of like delays, promises not kept by central government about some of these. But yours is simply about how we, when I say we, the local authority, whether the attached grants are impacting recognition. I just wanted a bit more explanation of that. Does that make sense, Luke, what I'm asking? I'm saying that there's been a movable fees from central government. Some of the grants haven't been delivered as promised, but that's a different issue that will be taken up with a different political process. I just really wanted to know what it means by review whether any initial conditions attached to grants impacting their recognition. I didn't quite follow what that meant, sorry.
Maybe it's a broader question for David as to what the testing looks like on some of those grants, I think.
Yep. No, I'm happy to take that one. So we'll pick a sample of the grants that the council have received during the year. Part of that, for those where the council concludes their principal, i.e. they have some control over those grants, we'll then look to see if there's any conditions. Now, if there are conditions that haven't been met, essentially the money that comes in via that grant shouldn't be recognised in the income account within that year. It will be maintained as a receipt in advance on the balance sheet. So that's where we're focused on. First of all, looking at the grant conditions. If there are conditions, we'll then be assessing whether those conditions have been met and therefore the money can be recognised in the income statement, or whether they're actually still to be met and therefore they'll still be held on the balance sheet as a receipt in advance. So that will be the focus of our testing around the conditions.
Makes sense enough, thanks. Yeah.
And what's the early results on that? Because it obviously takes us to the 31st of March. It was still early on in the pandemic at that time. From what you're seeing at current, is there anything material coming out of it?
I'd say that element of the work isn't that much progressed. But what we have done this year across all of our clients is consolidated accounting treatment across councils. So obviously a lot of these grants are going to be consistent from council to council. So we've got a record of what each not each council, but what a lot of councils are doing in terms of how they're accounting for them. And we're going to use that as a consistency check as well. So a further measure just to make sure that we're picking up any significant grants and actually there's some consistency of treatment between our clients.
Thank you. Can I turn to some questions around the group audit? I see that we have colleagues from Populo as well. Could you just describe a little bit about sort of the testing that you do? And in particular, could you talk through the scrutiny that you do in relation to the valuations process of those subsidiary audits?
Yep. When you say valuation, do you mean the valuation of the property and plant, or the?
Yes.
The
PP valuation is obviously so key with these particular companies. Could you just give some assurance as to what you do in that space?
Yep. So we set out the procedures in our group instructions to set up to the component auditor the assurance that we will want from them and the procedures we'd expect them to do in relation to those. We then meet with the component auditor just to talk through their approach and talk through any issues that they may have. They will then report back their findings. We'll review those findings and then we'll supplement that with a review of their file. And that's when we'll actually review the work they've done. And what we're looking to do is almost put our lens on it. So if we were going to do this work, this is the assurance we would want to get. Have they done sufficient in order to tick that box for us to conclude on the values that they're reporting?
And sort of follow-up question on the group audits is obviously to do with the timelines being in sequence. Can you just talk through that and whether there are any concerns towards the back end of the process and your ability to undertake all of the work?
From our side, we've issued the group instructions. We've got planning meetings in the diary. In fact, we've got one tomorrow where we're talking to the component auditor. We've set out the timescales that we require reporting back in order to make sure that we can finish by the 30th of September. So, everything's been set out, and we haven't been made aware of any situations where those timescales cannot be met. But obviously, we'll discuss with officers should anything come up.
Thank you. And could I make one suggestion of an action in relation to group audit, which is for Populo and FNH, I think particularly Populo given the size. Could Audit Committee see the draft accounts because of their size? Could those be circulated for information to Audit Committee members? Not for detailed scrutiny. I think it'd be interesting to say just look at the overall governance approach and so on. I think it'd still be helpful as a record for the committee if members agreed, or if indeed that would be possible.
Chair, it's Conrad. We can certainly do that. Stephen Benson, the Populo Finance Director, and also Tony Travers, one of the non-executives, are also here at the meeting. So it may be an appropriate point if you wanted to pick up the kind of overall point about governance in respect to Populo now or elsewhere on the agenda. But we can certainly circulate the draft accounts. We have them. It's no trouble.
Thank you. I guess sorry to take over the question on this section on the group accounts. My question, I guess, for Populo colleagues would be, could you just talk through the process in terms of completing the audit and how you engage with, say, the function in the borough, and just talk through about how the governance works in terms of the completion of the audit in relation to Newham as shareholder. Is that okay? Just so that we're all aligned on the process that you have.
Yes, of course. Thanks, Chair. Thanks, Conrad. As Conrad said, my name is Stephen Benson. I'm the Finance Director at Populo, and Tony Travers, one of our board members, is also here. So just to give you a quick overview of our group structure to start with. So Populo Living is the parent company of the Populo Group, the entity that's 100% owned by London Borough of Newham. There are two subsidiaries, active subsidiaries of Populo Living. We have a design and build company, common structure, for a development company, and we also have Populo Homes, which is our newly registered provider, which the intention is for that entity to own and manage all of the affordable homes that we build. So we've also got so each of those, the Populo Living, Populo Design and Build entities have the same board. They operate very much as the same company, but in legal terms they are separate. Populo Homes has due to it being a regulated entity, it has its own board of directors. We also have two group committees. The one that's relevant to this conversation more so is obviously the Audit and Risk Committee, and then we have Remunerations and Governance Committee as well. So in terms of the accounts, we've got a small finance team. We obviously have our own system, take our accounts to what we call trial balance, and BDO are our auditors, the component auditors, as David mentioned. The BDO, we use their audit function, but we also use what we call their accounts typing team. So we send off our TB, they prepare a draft set of accounts. We review those set of accounts, and then we issue a draft set of accounts by mid-May to LBN as our shareholder. We then and the intention for those is to end up in LBN's draft set of accounts by the end of May, I think, is the timeline that those guys work to. We've been in contact on various things with LBN's finance team over the last few weeks on the accounts. So there's a process of review and check and balance there. And in terms of our audit, we're quite well progressed through our audit. We've got the auditors. We're in they're not physically on site, but they are in the testing phase on site virtually. and we're expecting that audit process to complete in the next couple of weeks. We will be taking our draft accounts to, or our audited accounts, draft accounts to our Audit and Risk Committee. I believe the date off the top of my head is the 12th of August. And then the intention is that they will obviously scrutinise, review, and then, subject to satisfactory scrutiny, they will recommend to our the boards within the group to approve those accounts, and those meetings will all take place in August. So by the end of August, we would expect to have approved subsidiary accounts to issue to LBN.
Thank you. And then just in terms of the interplay there, so how do the results of that audit feed through into EUI's work for the borough, and also how do the results of that audit feed through into Newham as shareholder? So just in terms of the process flow there.
Yeah, so we don't, I'll hand over to David in a minute because he knows a bit more about the process, I'm sure. We don't have any direct contact with EY. BDO, as our auditors, will generally liaise with EY and report into you guys. David, I don't know if you want to expand on that a little bit.
Yep, sure. Yeah, so in our group instructions, we set out the reporting requirements for BDO as the component auditor. So once they've completed their procedures, they'll complete those reporting procedures, which will set out their findings, their opinion on the specific aspects on which we've requested assurance, and that will come back. What we also include is an early warning memo. So we ask them not to wait until the last moment before flagging this, and if anything should come up during the course of their audit, then they would ping that to us at that point in time so that we can consider those issues.
Thank you. I think it's a really helpful conversation to have about understanding that process. But Conrad, I see that you've raised your hand.
It was only just to add slightly that last point. Obviously, Stephen and myself and the team here, also stay in contact. So, in the unlikely event BDO uncovered some significant issue in the popular accounts, and it wouldn't, although it would feed through into the EY audit, and so of course we would be notified of that sort of as and when, rather than waiting for the the audit results. We've already had some conversations about how to ensure consistency of accounting treatment, for example, on a couple of complex areas across the group. So there is that close working relationship there to make sure all this comes together neatly.
Okay, good. Are there any questions from members about the groups and the subsidiary companies, or shall we move on? Great. Can we open it up to any other questions on the audit plan and report? Belgica first, thank you.
I want to come back to the new general ledger. I was, I'm thinking if do you have any percentage of the risks we could lose through in the process of the change? Because always, I think the system cannot be perfect, or maybe they can work, but always is a some percentage of the risk. Do you have that? Or?
It was perhaps one for Conrad. Did you catch that?
Yes, sorry, I was just failing to unmute myself, so apologies for that. So I could get you the figures on that. I don't have the exact numbers to hand, but just to give you a sense of reassurance. So in line with sort of good project management practice for when you undertake a big project like this in terms of transferring your general ledger over, we probably had about 4 or 5 dummy data runs and data transfers as part of the project for the final one, to make sure the process was really well understood. The first 1 or 2 of those, of course, you would expect an error rate, but the last 2 or 3 dummy runs, I emphasise, the pass mark for those was, if you like, in the high 90s, and of course for the final one, once we've ironed out any of the the teething issues, that is precisely why you have those dummy runs. The pass mark, if you like, for that final reconciliation would have been 99.9%. point quite a lot. I need to look at the precise figure, but it's done to an extremely high level of accuracy. It's also important to emphasise, this is not, we did not move from, say, for example, the Oracle product to, I don't know, SAP or Aggresso or some other system, which would have been a much more complex project. We moved from the Oracle 12 instance that the council had to the Oracle Fusion product, which is just the sort of next iteration of the Fusion of the Oracle suite of products. So, although of course there are risks in that data reconciliation process, and we manage them as I've described in line with ordinary project management practice, those risks are less precisely because you're just moving from one version of a system to another, rather than from one complete system to another software provider altogether. I hope that gives you a reassurance that you're looking for. As I say, I can circulate precise results of those testing regimes if that's thought helpful, but I can give an assurance that the standards were very stringent. We wouldn't have pressed go live unless we're very satisfied on that point.
We just to cover it off, shall we just receive the headline stats? I think that might be worth doing. It's easy. Yeah. Thank you.
No problem. I'll get those sorted.
Brilliant. Is it Winston next?
Thank you very much indeed. Referring to page 50, under what is the risk area of focus refers to ISA 570. In the second paragraph, it states about the revised standards effective for the audit of 2021 financial statements. And it talks about additional work that you have to do in order to meet those standards. And apart from what is mentioned, what will we do, what is the significant difference between the new standard and what operated in the past?
Yes, David, thank you. ISA 570 going concern new requirement.
Yep. So the new standard essentially brought on more prescriptive measures in terms of which the auditor would need to assess the council's own assessment of going concern, and that kind of brought in standards like reviewing the cash flow forecast modelling in more detail to a period at least 12 months from the point of which we sign our opinion, challenging significant assumptions that are used within those cash flow modelling, looking at the liquidity, essentially just more of a challenge on the going concern assumption. Now what we actually did in 2019-20 was almost like a dry run. So we knew what that new standard was coming in. The pandemic came in, and suddenly going concern was a bigger issue in local government audit world than it had been in previous years. So we actually used a lot of the requirements coming in on the new standard and applied that in 1920. So we had a very good dry run. So officers will be very aware of what we're going to ask, and we've already had discussions with them this year in relation to our going concern work.
Can I follow up? Does this then mean that the charges for the audit will increase if you're going to adhere to the new standard?
So that was part of the additional fee in 1920, and yeah, if we spend additional time on it again, that will be part of our additional fee for 2021. But as we do each year, we'll then have discussions with Conrad and the finance team about any areas of additional work.
Just actually, whilst you mentioned fees, I think actually there's a positive story buried somewhere, which is that the fees from the fees have effectively come down probably about 20% since the previous FY. So that's probably a good story for the council in terms of the quality of the accounts. Just to flag that whilst we mentioned fees. Neil, did you have one?
Yeah, my value for money one, nice. Yeah, flagged up. Yeah. Yeah. Basically, I get that it's similar to Winston's point that there's new regulations surrounding this, and under the 2020 code, you're still required to consider whether the council's put into place proper arrangements about securing economy. I'm quoting directly from your paragraph, David. I think I'm addressing this too, about secure economy, efficiency, effectiveness on use of resources, but no longer an overall evaluation criterion. I get that. But then if I look at the detail where you're looking, and you highlighted in your introductory comments about the inspection findings, which we, the Ofsted work, which is clearly, a continuing one, but also governance work. But then where you've got that reference on page 55, it says, we have yet to complete our detailed FM planning. So you've identified those two. Do you think there's anything, it's a bit like preemptive strike, Chair, so do you think there's anything else that you'll be likely to look at, or is it too early to say?
Yeah, so we've done some initial, but the problem with the new code came out quite late, and the guidance notes came out even later in terms of how it would be applied. So we've done some initial work on what we thought would be the requirement, which identified those two risk areas. We're currently working through the commentary. The idea is that you work through the three main sub-criteria that's set out on page 53. So you've got your financial sustainability, your governance, and then improving economy, efficiency and effectiveness. And below each of those, the NEO have stipulated sub-criteria, and essentially a list of questions on which we don't just form a view, but actually form a commentary on how the council or what arrangements the council has in place in relation to that. So we're currently working through that at the moment. And from that, additional risks may come. But at this point in time, we've not identified any additional risks.
Well, just out of interest, because I think it'd be helpful, just when you said it came out late for a 2020 code, I think we had references to this before. Was it sort of November, December or something?
I think that's when the actual change to the code came out, so the actual code. But then what the National Audit Office do is they provide an auditor guidance note, so it kind of gives further interpretation as to what they expect the firms to do in compliance with the code requirements, and that then came out earlier this year. We've then obviously looked at that and formed our own view in terms of the procedures that we need to perform.
So we know, sorry, Lou, is that okay? So we know that there's definitely two areas that you will be covering, but there may be more as a result of any further investigation. And my last point, it implies, I don't know whether I'm being pedantic here, it implies that there's a sort of separate section. That wasn't, a separate report. It's got to be seen separately and in clear, readily understandable, highlighting any issues we wish to draw, etc. It implied to me that it wasn't just an appendix, it was a separate reporting line on value for money. Am I misinterpreting?
So in terms of reporting, so we've just gone through this for the first stage for our NHS audits that report earlier. So what we would do is report our commentary and our final position on value for money in the auditor's annual report, which is the new public-facing report that we'll produce. The timelines are not quite so clear this year. So the idea is that you do that work at the same time as you do the opinion, and you close off the audit in one place. What the NEO have recognised is that because of some of the delays to the guidance notes, to the delays caused by the pandemic, that the auditor's annual report may come a little bit later. But what we did with our health audits is actually to include that commentary, even if it's at draft stage, within the audit results report. So when we concluded the audit on the financial statements, we were able to report to the committee at that point whether this is the commentary that we got on the money.
Yeah. So it's going to be presented in one, but there may be sort of a supplementary coming back. Yeah. Is that how I'm understanding it? That's fine, if that's the case. Yeah.
Daniel.
I think David's frozen, by the way.
Yes. Well, if it's helpful, can I say that I think my questions have kind of been answered anyway, but if I could just make one comment, because one of the questions was about the realism of the September date, and I think we had an answer that gave us confidence there. But my other query was about the additional fee, and that's kind of been covered already. But if I could just say that on page 73 of the bundle, page 39 of the EY papers, I was trying to compare footnote 1 and footnote 2 about what the additional fee, what the drop was, and I found it very difficult to compare, and they, it just seemed like very different things being listed in each one. So if there could be on another occasion some layperson's explanation of how to understand the difference, that would be appreciated. But I think it's been covered enough tonight. Thank you.
Okay, I think it was just more of a thought about how the fee report is written in the future. I think that's helpful. Can I just end by just one question? Because definitely, sorry, we are overrunning. Final question on materiality, which is, again, positive journey that the council is on, increasing confidence in the quality of the accounts, higher materiality. I guess there's that rationale, but does that also cover over to, say, the subsidiary companies? So I think the consequence is that, I might be mistaken, and apologies, is the consequence that Juniper is effectively missed from your group instructions this year, Dave? Is that the quality? Is that the logical flow through increased materiality that Juniper falls off? Or am I misremembering what was in the group order last year?
The scoping for Juniper has changed partly as a result of the change in materiality, but it's not that it falls off completely in terms of we don't do anything on it. It falls within our review scope, so we still look at the financial statements produced for Juniper. We'll still carry out some analytical procedures, and we'll still make sure that they have been correctly consolidated within the council's group position. I think it's probably worth noting in terms of when we do our scoping, we first assess based on size, and we typically look at an individual component being more than 15% of the group gross expenditure being the level at which we set our materiality. All of the components put together are, I think, around 3% at the moment, so none of them are falling in relation to that. We then look at risk in terms of whether there's any individual accounts eclipsing our materiality level, and again, it's only Popular and Future New Homes that do that.
Is it this year we're getting? Are you doing, just for understanding, are you doing less work on Juniper this year in terms of your testing then and work? Is that the concept?
For 2021, yeah, less, unless we look at the accounts or there's anything that comes out from our analytical procedures.
Well, that's effect my sort of challenge really, which is your macro story about increasing the materiality, I think applies writ large to the council, the quality of accounts. It doesn't necessarily zoom into the detail and make that follow through from the subsidiary companies. So, and I know elsewhere you have differing levels of materiality. I'm just wondering, really, Sean, can we probe I understand all of the logic that's followed, but the resultant consequence is that less work is being done on Juniper. And does that actually feel right in terms of the risk of Juniper? To me, probably would feel constant, at least from the previous FY, but this year, we're dropping it from your work. So I just would quite like to understand this or challenge the fact that perhaps we should think about materiality slightly more complexly and think about resuming the same equivalent work that took place last FY.
Yep. So in terms of materiality levels, we can only set one level of materiality. So as it stands, Juniper, based on the previous year's figures, for it to be materially incorrect, that the whole of the value of the expenditure would have to be incorrect. Now, I appreciate that's because we're applying a very larger area, larger value of materiality in terms of the council, and Juniper is incredibly small in comparison to the group. I mean, I wonder if the assurance of the committee would better be served is actually to see the single entity accounts for Juniper and potentially the external audit of the Juniper's single entity accounts, which will obviously feature into the group. I don't know the timescales of that and whether that's potentially an option. I don't know if Conrad can answer on that one.
I think it would give that would theoretically give us more assurance, given that less work is being done this year. I wonder just what can be done in this space.
So, I mean, it's a matter for the committee. I mean, just sort of state the rather pedantically legally obvious point that, you know, EY are not Juniper's auditors, that they're involved in the audit of that to the extent that, as David has described, they're consolidated into the council's accounts. Clearly, if the committee feel that they would like more information on Juniper, then we can facilitate that in at least two obvious ways. One would be simply to circulate the accounts and, you know, invite comments from members of the committee. The second, and these two are not mutually exclusive, would be to arrange for suitable directors from Juniper to present or discuss the accounts with the committee. The only slight issue I can see with that is your agenda for the 14th of July is exceptionally busy already. And then the next scheduled meeting of the committee, I believe, is the 30th of September meeting. But, you know, even if the committee wasn't meeting formally, you know, a separate meeting could be arranged to provide some of that assurance if it was thought helpful. I wonder if perhaps the starting point is for me to arrange to have the Juniper accounts circulated, and then the committee could decide what, if any, further action or further assurance they would like to receive.
I think that's a welcome suggestion. I think we're only really making this point is because EY are doing less testing, less work on it this year. Therefore, we might want to just sort of plug that in a different way. So should we just take it offline about how best we do that, just to give the committee assurance? But I quite like that suggestion of sharing the accounts. And, if members agree on that one.
Yeah.
Okay. Well, thank you very much for that. And would I be correct in turning to Chloe to give would you mind just a very brief overview of perhaps the differences in terms of the pension plan?
Absolutely, yes, I can do that. Thank you, Chair. So on page 83 of your agenda pack, you'll find our audit plan in respect of Newham Pension Fund for the year ended 31st of March 2021. So page 87 of your pack, or page 5 of our report, gives a summary of the risks that we have identified. So you'll see that our risks remain largely consistent with the previous year, with the addition of a higher inherent risk over the level 2 investment valuations. As David mentioned, on the council side, we do assess there to be a risk of material misstatement due to fraud or error on every audit. So for the pension fund specifically, we consider this risk to manifest through investment journal posting. So there is a difference there. We then also have a significant risk over the valuation of complex and harder to value investments, or otherwise known as level 3 investments. And that significant risk was also present last year as well. So similar to the council report, you'll see that pages 91 to 94 provide additional detail on our risks and the procedures we've designed to address them. Those are very similar to what you'll have seen in previous years' reports, so there's not really any significant changes this year. So I won't go into any detail at this stage, but I'm happy to take any questions on those. Page 96, we've set out our materiality levels. So overall materiality of 13.7 million, and that represents 1% of the pension fund's prior year net assets. And that basis percentage is the same as the previous year's audit. So no changes on the materiality front. We have calculated our performance materiality, so that's the level of materiality that we will use to conduct our procedures. That's set at 75%, which is 10.28 million. So there is a difference there to the council where we use 50%. And that just reflects the factor that historically we don't have a high level of errors or misstatements or adjustments within the pension fund account. So that level of materiality reflects our previous experience. And lastly, all the audit differences over 0.685 million will be communicated to you as those charged with governance. And then the only other point in the report that I'll just quickly pull out is that in section 7 of our report, you'll see I've outlined that we do continue to remain independent as well. But I am happy to take any questions if there are any.
Thank you. Any members on that? I don't see any questions there, so thank you for talking us through that. I think we're asked in effect to agree the plan on the contents of the plan, and I think we are asked a specific question as to the continuity of Janet, because her tenure would extend to 6 years. So I think we are asked to formally agree that according to the report. So can I ask members if they're content to do so, to agree the report and agree continuity of partner Janet? Yeah. Okay.
Sorry, can you project a bit more? I'm on hearing aids and I'm losing some of what you're saying.
Yes, I shall, yes.
Sorry.
We were just being asked to agree the report and agree the extension of the partner. Yeah. So I think there was agreement. So thank you to EY colleagues, and I think on that basis we can move to item 6, and I believe it is Nicola to introduce the revision to the new code.
Thank you, Chair. Nicola Wood, Head of Assurance at Newham. As part of the annual governance statement each year, we're required to review compliance against the local code of corporate governance. Newham's current local code of corporate governance was last updated in May 2009 and hence requires a revamp. This paper brings that up to date, so to enable us then in the next agenda item to include that as part of the annual governance statement. I'll take the paper as read and happy to take any questions against this.
Any questions, comments? Yes, Winston.
I just want to pick up one bullet point on page 120. Appendix A states maintain shared heart values, which is honesty, equality, ambition, and respect. What is the time scales to achieving this?
So the local code of corporate governance is aspirational. It's something that Newham are expected to adhere to, comply with. Heart values have been in place, as you know, for about a year now at least, and there is a requirement for them for the CMT for officers to demonstrate how we comply with those, and those will get reported back against to the CMT on a regular basis.
Another chair for that.
Yeah, thank you.
On page 122, first section, second to last paragraph, bullet point. Ensure arrangements are in place to maintain the health and well-being of the workforce. Could you describe, please, what you're doing to achieve that?
Certainly. So we have a health and safety board that's newly established, and we're working through that. And below the health and safety board, we have Directorate Health and Safety Board, which looks after our employees, and that's a regular basis. Well-being, obviously, we have HR policies and procedures that need to be complied with, including taking sufficient time off work, stress management, etc. So those are ongoing as well.
Yeah.
Are you working with the unions on this matter? Trade unions, that is.
So as a resources directorate, which is directorate I'm in, we have quarterly updates with the unions on all of the key issues, such as health and safety, such as well-being of the workforce, and anything that will impact our workforce. And I believe that unions also have regular updates with other directorates and certainly with the HR team and the health and safety teams.
Okay.
That's correct. Yeah, the pattern that Nicola describes in the resources department is reflected across the council to ensure that trade unions are involved absolutely in matters to do with the workforce.
Thank you. So I think we're asked. Oh, sorry. I see. Is that a new hand, Daniel? Yeah. Thank you.
Hi. Yeah, I had similar questions. There's references to various things that are obviously appropriate. I didn't spot a bullet point, and I wonder if they should be bullet points rather than numbered or lettered items for easier reference. But I don't think I saw anything on tackling or eradicating bullying in the workplace, which kind of relates to Winston's last question about maintaining the health and well-being of the workforce, but it comes under a number of these principles. And a second comment, maybe I'm being pedantic, but in page 121, there's a bullet point above 3, establish a participation framework, etc., etc. And above that, there's one, establish community assemblies. And I really felt that the one above was a subsection of the participation framework, and the assemblies that have been established and trialed and tested over the last 3 years, have undergone various iterations and may do again, I don't know. And it just seemed like the participation framework was all that was necessary for this document, but maybe I'm going a bit over the top there.
I think we'll take those as noted comments, which could be reflected in the drafting, if that's okay. Can I ask members if they're content to the final question?
There's a question.
Yeah.
It's come to this committee with Nicola, and it's certainly well structured, so it's not criticism of that. It says on page 119 that it's a proposed local code of corporate governance brought here. Where does it go? We are sort of like noting it, but where does it go in the council structure? I wasn't clear from the covering report.
Naturally, just to layer on that, if that's okay, I was going to ask around, where does this go? Is there any sort of like staff training, comms, wrappers around this into the organisation?
So my understanding is that the audit committee approved this. It then doesn't need to be approved above that, because the audit committee have delegation for looking at the arrangements in place, and this is certainly one of the fundamental arrangements of corporate governance. It will be published on the website, intranet site, sorry, and also on the website, because it is a cornerstone of the council's local code of corporate governance, which should be published. And when it is launched on the intranet, it will be done so via our senior leadership forum, which is the wider group of managers, and then it will be cascaded from that wider group of managers group down through their teams.
Okay, that's helpful. I think we're asked to agree the contents of that report, so you just raise your hands if you're content. Yeah, that's all agreed. So thank you, Nicola.
Thank you, Chair.
So item 7 on the draft AGS, I think I'm inviting Adrian to speak, and if you wouldn't mind, would you just talk about the journey of the AGS as well, in terms of who sees it, signs it, as well as us? Thank you.
Yeah, thank you. Hello there. I'm Adrian May. I'm Assistant Director of Corporate Governance. So you can see my role as the head of committees, and also I'm the statutory lead officer for scrutiny. But I do have a role in coordinating the production of the annual governance statement, working alongside audit, finance and legal colleagues and the corporate management team as well. So effectively, to answer your question, so I coordinate the production of it, working alongside my corporate colleagues, but I also meet on an individual basis all the corporate directors. Once it's drafted by myself, it will go to, or it has gone to, the corporate management team for review, effectively sign off, but also has gone to the mayor as well for review. as well, because both the chief exec and the mayor need to effectively sign a statement off. Okay, so that's the journey, if you like, or the process. So with regards to the AGS, it's statement of internal control. Gives this year gives information on how the council is organised and structured. It also covers who makes decisions within the council. It gives information on the ongoing overall governance framework operating in Newham. So this year we've put an illustration, a diagram, which you'll find on your agenda pack, page 137. Just to note, the diagram has roles and responsibilities of the various council directorates at the bottom of the diagram. And it's been highlighted by a member of the committee that probably it could benefit from a bit of clarification between the roles, between Brighter Futures and CYP regarding child safety. So we might like to add a short paragraph just to better illustrate that and deal with that issue. SIT for training to officers on the AGS a few months ago made it clear that really they're expecting to see in council AGS's the governance and decision-making arrangements during the COVID-19. So we've put this down and articulated it from page 140 onwards. Finance has carried out a self-assessment of the SIT for Financial Code of Conduct, the Financial Management Code. That appears from page 143, which was not a statutory requirement for this year. It does explain how finance think they're going to achieve full compliance with that code by 21-22. As required, and every year, the AGS includes the Head of Assurance, Nicola Wood, internal audit's opinions on the effectiveness of the council's risk management internal code and controls and governance processes. So her opinion is outlined on page 145. It does highlight two main categories, getting limited, only limited assurance. So that's risk management and also internal controls. The AGS contains an assessment against the updated local code of conduct. So we've just had that as an agenda item, and any changes that were articulated and flagged up by members. So I can then reflect where it appears in the AGS statement based on the discussion that has just been had by the committee. AGS ends by giving an update on the significant governance issues that have been highlighted in previous statements. Just for the benefit of the committee and residents watching, so significant governance issues can be major issues preventing delivery of major objectives or council's aspirations. Issues that required major additional funding, reputational damage, anything that had a material impact on the accounts, any formal action taken under the powers of 151 of the monitoring officer, and also any adverse external inspections. So whilst there was no new significant governance issues identified for 2021, we do have 3 remaining open, which was the tower blocks and fire safety, our Ofsted inspection, and also weakness in project management. And that's besides the 2 main limited assurance categories of risk management and internal controls by the Head of Assurance. Also, just to say thank you to Councillor Blaney, who forwarded some comments already regarding a number of issues, but including style and sort of grammar issues within the statement. So it's obviously down to the committee and the chair, but I might take this opportunity just to say if it is approved, then it would be approved with some delegated authority for an officer just to make amendments, you know, around minor style, format and grammar changes that are spotted in the document. So that's my kind of summary. I'm obviously joined here by colleagues from Audit and Finance as well, so hopefully we can field any questions amongst us. So thank you very much, committee.
Thank you. And just before I turn to members of the committee, I think if there are these stylistic changes, let's take them offline and almost, if you'd be willing sort of to delegate authority around styling and formatting. I think that perhaps a few suggestions that we might have, if that's okay. Would any members like to go first? Neil.
Mine is not a style question, you'll be reassured. I don't know quite where to address this one, Adrian, but I used to have a role in equalities and social inclusion. It says on page 151 that the internal audit, so it may be internal audit colleagues need to answer this one. Internal audit to undertake an EQA during 2022-23. My usual question, Chair, you won't be surprised, you know me well enough already. When was the last one undertaken?
So Nicola Wood, Head of Assurance. So the standards require internal audit to have an external quality assessment every 5 years. Ours was last undertaken between 6 and 7 years ago.
So there was slippage, Nicola, that's what I was indicating.
Yeah, absolutely. So what we're doing this year, as you know, we're bringing back to the October Audit Committee an internal EQA. When I joined, I did my own desktop review of where I thought we were against the standards. We're now doing a proper internal review against that. And as we're part of the Institute of Internal Auditors London Audit Group, who meet every month, or the heads of audit meet every month, there is a programme by which different heads of audit undertake this EQA so that it's cost effective, and we have experts from different boroughs looking. And the first one we got is 2022-23, and we have the London Borough of Croydon who will be doing our EQA for us.
Can I just have a supplementary?
Yeah.
I'm reassured because it came up in the previous meeting, you know, about the slippage. We do need to learn from good practice, and we can also learn from local authorities. In terms of that internal audit, if it's 2022-23, it's against this implementing good practice in transparency, reporting and audit to effectively accountability. I think you've already mentioned the website. It may be back to Adrian about this. I'm still finding, even though I've been on the council, I don't know how many years, it's difficult to navigate around this. And if we are serious about, you know, good practice in transparency and reporting and audit, it's about how others, and I think it's quite good that we're live on these meetings so that the public know this as well, Chair, that, you know, how easy and accessible is both the language, but also just the physicality of getting it on the website. Does that make sense where I'm going? This is a more general comment, I think, to Adrian, who's attached to what Nicola just mentioned about this. You know.
Okay. Yes, could I actually just make one comment about accessibility on the website? It's more of a specific, which was the governance framework diagram references the one source joint committee. For me, it wasn't readily accessible on the Newham website because I believe the joint committee minutes for one source are held on the Havering website. So I think there's an easy thing to do, probably on including a link on Newham's website, and also something for the AGS as well. Because I know you helpfully do include some of the links throughout those. That's just one thought. I don't know if you want to come back on that.
Yeah, I think the joint one source committee issue has been resolved. I want to just go on there and check it myself. But effectively, if you go onto the committees, find the joint committee, it does just provide a link to the Havering site who do the clerking for that particular committee. And with regards to the accessibility of the council website overall and documents like the annual governance statement, I have received comments, and I've also received comments about the easiness to even find the constitution, which I just save in my favourites, but anyone trying to find it, you know, from scratch is going to struggle. So there is a governance team that look at the internet site, and we've already raised this with them, saying where we want it, and it would be basically under the Your Council section, and then there's a sort of subsection where the constitution would appear, because it's quite hard to get to. So there's various governance documents, and I do take members of the committee's point about the accessibility. I'm not in comms, but certainly I work close enough with them to try and address these issues that the committee's raising.
That's helpful. I think I personally find it difficult to navigate certain aspects of the website. So I think any iteration of that would be welcome, certainly by this committee. Let's see, Winston, thank you. And then Anthony.
Page 145 on the head of assurance, opinion on the control environment. On the table below, under risk management, where there's limited assurance, and internal control, where there's also limited assurance. And in the commentary, it's significant gaps, weaknesses, and non-compliance were identified in the first one. And the second one, significant gaps, weakness, and non-compliance were also identified across areas of the accounts, procurement, ICT infrastructure, and ICT assets. You stated on the work plan to improve noise control environment. And the last paragraph on the risk management says the focus during 2021 is to update directorate level risks and to ensure that the leadership team in NUM remains focused. Now, how far is that work being done? And is it being monitored at the moment? When you would expect to have that fully complied with? And under internal controls,
I think it's something similar, isn't it? I think it's a similar, we'd like to see almost a word of the progress towards those gaps, those reports that Winston read out. When's the target date and what's the progress towards those? And your first part of the question was a good one as well on risk. What's the target date for those risk work plans? I think those could be some helpful additions to that right-hand side column about planned work. If you were able to catch that, sorry, for those of you on virtual. So referring to your head of assurance opinion, Nicola, and the just extra comments around progress.
Extra wording on target delivery for that.
For risk management, and also if you look at what Winston, I think, rightly called out, was if you look in the internal controls box in the corner, it might also just be worth saying something about the progress against those areas of non-compliance that were referenced. I think that's effectively the fact that they come to audit committee. We don't need to wordsmith it now, but some sentences that directly reference those gaps in non-compliance and the planned progress there.
Okay, thank you, Chair. We'll do that.
Oh, yeah, was it another?
I think there's another one. So.
Yeah.
Sorry about all of this. Page 148. And the first box talks about establishing a trade, tackling racism, inequality, and disproportionality program to ensure all officers and residents are treated fairly. How are we doing on that? Have you issued guidance on that at the moment?
Would you like me to take that one?
Okay.
Thank you.
So that's one of the key programs for the council internally in terms of how we manage our staff as employees, and also externally in terms of how we ensure that services are delivered in an equitable and fair way. There's an awful lot I could say about that, because it is, as I say, one of the most important programs that the council is running. So you absolutely have that assurance that there's a lot of attention at that right at the most senior level of management in the council to ensure that it's delivering meaningful change. If the question is precisely when will that finish, again, I don't have an exact date to hand, and to some extent, of course, because what we're doing in some cases, for example, is delving into data that's not been looked at previously in order to establish whether there are any trends that we should be concerned about. So, of course, until you know the outcome of that examination of the data, it's hard to say precisely when all the issues arising from it will be addressed. But I can give the absolute assurance that that is one of the programs being most closely managed right up to the chief executive level.
Anthony, did you have one?
Yes, thanks, Chair. Winston raised the points I wanted to raise, and the answers satisfy me. However, there's one addition in page 149, section 4 on that page, the third to last bullet point. It says senior managers and members are provided with timely financial and performance information. On the back of this, can I ask Conrad, for instance, the end of year financial performance, which took us onto the 1st of March, when can I have sight of that as a member?
You got the accounts at this meeting today, which provide an admittedly technical summary of that. Of course, there's a narrative to that. And on the 20th of July, Cabinet, the July Finance Review will pick up the sort of looking back. So that will report into Cabinet on the results of last year, including the accounts. It will pick up the forecast for the current financial year, and it will pick up the long-term financial position. I should qualify the latter by saying to the extent that we can know it, because there's sort of a fair degree of uncertainty around government funding position. Once you start looking out into the long term, the 20th of July Cabinet is the answer to your question, Councillor.
Thank you. That's what I was hoping to hear. It would be the 20th. Okay, thanks.
John.
Thank you, Chair. Yeah, I've got a bullet point on page 148, section 2. It's in fact the last but one bullet point. Encourage and assist citizens to inspect the statement of accounts in accordance with regulations. I wonder what has been done to encourage residents to do this and to make it easier for them, because I do know that in the past this wasn't encouraged, and I wonder what has been done in recent times to actually to make it easier for citizens to have access to the statement of accounts.
Nicola Wood, Head of Assurance. So on updating this from the last update, which I remind you was 2009, since then the Newham has an updated internet site, and the report and accounts are published there. We obviously have meetings now which the public and residents can not only attend but can watch as well, so that facilitates that. So hopefully that answers some of those questions.
See, Andrew, you just popped your hand up there.
I did, Chair. Thank you.
Are we challenging ourselves that is there more that we could be doing in this space in terms of access?
We're now working closely with our communications team, and we'll be able to sort of promote the publication of our unaudited accounts, to make sure we get the message out there and take their advice on board about what actually works and connects with people and residents on what I understand some would consider quite a dry set of papers, but to try and create more interest in them, we are going to work with the professionals on that.
Thank you. I think that's helpful.
That sounds like progress. Yeah. Thank you.
Yeah.
Okay, just to reiterate that it ties up with that point in the EY report about value for money statements should be clear and accessible. I'm going to keep banging on about it. We may be a bit geeky here in the way we're having to talk in certain language and cross-reference, but the whole idea of, I think this is where John is coming from, if we're not only encouraging but assist citizens, it should be that it's not just the level of language. I don't mean my sort of pedantry with grammar. I mean it's just about accessible language and to make certain that they can find them and engage in it. Yeah, and back to us as questions. I speak as a ward councillor level, that people don't come to my surgery to talk about the accounts, but they will be talking about the general. They want some reassurance about value for money or how the council's using its resources.
Yeah, can I sort of invite just a little bit of thinking in the future around layered comms? If you take, for example, what Bank of England does with their inflation report, it's a very detailed technical document. but they really go up a level and they produce things like videos or more one-page concise summaries and things like that. So in thinking about layered comms around the statement of accounts, that might help get us towards, I think, what John and Neil have highlighted around assisting citizens to access the statement of accounts. A bit of a sort of gauntlet challenge around layered comms and more accessibility that could be done, I think.
I found those comments really helpful. Thank you. We'll take that on board and fold that into our approach this year. Thank you.
Thank you. And just ever so briefly, I'll just say one thing. I think Pelchika has a comment, which is just one suggestion around where you reference the gold command structure in the AGS. I'm just flicking through. I think it's page 142. There's a section on the gold controller, command and controller instruction of COVID-19. There was a recent internal audit commissioned by BDO into some of this. I think there were some quite positive results from that audit around minute-taking governance, clear clarity of control in that structure. I think perhaps a sentence to explain the results of that audit would just be beneficial.
Yep, we can add that, Chair.
Yeah.
Thank you.
Okay, just reading some parts, but it seems the updating is so important, but I don't get it. Why is like so late the updating from 2009 and the other 2016, but all of them is like linked for the service, they trying to improve every area. This is I want to know why there's like so long they're updating these areas.
The code of governance, like took.
Yes.
Right, yeah.
From 2009 and the other,
yes.
But all are they relating for this area as well.
Yes. Okay. Yeah, I think good question. Why such a long time between updating the code of governance?
I don't mean to be unhelpful, Chair, but I think the people who you want to ask that question of probably no longer work for the council. So, I acknowledge the point absolutely. We're now updating these documents frequently in the way they should be. I can't speak for the period between 2009 and 2018, and I don't really think many people in this meeting can. So I acknowledge the point entirely, but I think the only answer I can give is that we're now updating these frequently in the way that they ought to be. I know that's not terribly helpful, but I think it's really the best that I can do, I'm afraid.
I think that's understandable. Thank you. Yeah. Can we take the last question from Daniel? Thank you.
Thank you. I'm just going to reference our terms of reference because obviously this is our term of reference 9.4, the production of the Council's statement on corporate governance and internal control. But I'm also thinking about 9.5, which is the Council's arrangements for corporate governance, and also 3.21 and risk management. And it's referring back to the point made earlier, which I do want to emphasize a minute, which is the chart on 137 and the responsibilities between Brighter Futures and Children and Young People, which is something I have asked before, and this is a new version, a new a communication about what the distinction is. I looking at this, I mean, in a way, I'm grateful, but it raises more questions for me than resolves any that I had. I cannot understand it at all. Just for example, you've got in Brighter Future safeguarding children in education, you've got safeguarding and protection of children at risk, protection of children in need, and then you've got and quality of early years provision. But in CYP, you've got children's safeguarding, including safeguarding for corporate parenting and education duties. And I don't feel this is just a matter of editing a document to make it clearer. I think there's serious questions about governance which I think this audit committee has a responsibility to raise. And I'm just not happy at all with anything we've been given, either today or when this has previously been asked, about actually where responsibilities lie, given that this is an area where the local authorities, both reputation and the harm it can cause is obvious to everyone. We know from the last 20 years how badly local authorities can be affected in these areas. We know from our own reports that this is a vital area, and I'm just not happy that in a major inquiry we could really answer the question satisfactorily that need to be asked about whose responsibilities are what here. I'm not going to say anything about the presentation of the report specifically because I think we've had a helpful explanation earlier that actually this has probably been looked at by too many people, and that's maybe why in places it's just difficult to read. But I think it is important, if we are being asked to approve a document, and I don't have a vote today, and that's fine, that we don't approve something that is embarrassing. And just for example, I'm going to read out a sentence, and there is no comma in this sentence, and I just don't think this is the kind of sentence that we should be approving. Underpinning this, the Council is conducting an exercise to remap service plans and the benefit realisation framework that will ensure effective management and delivery to achieve desired outcomes, and work continues to enhance budget management to enable timely delivery of savings and investments. I mean, it's just not, it's not good material to approve and then to publish. And I know that I've made more comments which have been circulated. Thanks.
Understood. I think, can we note the point about Brighter Futures and CYP lines of accountability, and maybe just make sure the relevant leads receive that particular point from the minutes, if that's passed to them. And I think that is a good end to the discussion, I think, Daniel. So I think what I would be suggesting to members is that we effectively agree to approve the draft AGS, but subject to sort of offline stylistic formatting changes that Daniel and I can discuss with officers, and almost I think perhaps delegate it to myself as perhaps chair, following on from reviewing those changes that Daniel in particular is identifying. Is that broadly the position that we're at? Is everyone agreeable there? That's the members in the room. If you could raise your hands. Yeah. Okay. So thank you. So it's approved as subject to that sort of process articulated there. So thank you, Adrian, for presenting that item.
Okay. Thank you, Chair. Thanks, committee.
So let's move on to the going concern assessment. Agenda item 8. I think I may well be handing over to Mene to give an overview. It's the second time we've seen this. Whole context of the other councils and the importance of this. Yeah, I think if you could just offer a brief moment, Mene, about the report.
Chair, sorry, it's Andrew Ward, Assistant Director of Finance. I was going to actually just cover a few points on this report, if that's okay.
Thank you.
Thank you. So, as we heard from our audit colleague David earlier, this is the second year we've produced a going concern assessment. Probably fair to say the issue of going concern was not overly troubling local authority accountants and audits sort of in the years preceding that, but with the onset of the pandemic and the impact of the pandemic against the backdrop, I have to sort of remind people of significant funding reductions for local government, it was thought necessary to produce a going concern assessment. So we have, of course, repeated the exercise for the 2020-21 financial year. To cut to the end, I mean, the conclusion is that London Borough of Newham remains a going concern. We think that assessing against the 3 areas which are listed in the report, that there's enough evidence to suggest we remain a going concern. So in terms of the current financial position, if we look at the outturn as reported in the draft statement of accounts, it was a £9 million overspend against budget last year. That overspend should be seen as sort of in the context of it was identified early on. It's consistent with our Q3 budget monitoring. So that's the budget monitoring produced at the end of December, early January in last year, and our budget basically accommodates that and acknowledges that the drop in reserves and the planned build back up of our general fund reserves as well. So it's been monitored, identified, and managed appropriately, I believe. To talk about reserve, there's obviously a few tables in there which break down our position on reserves and talk about the concept of legally usable reserves, and then we get to the 231 million of earmarked reserves, and within that, the information is designed to give some assurance that there are certainly, whilst there are different purposes and different earmarks, if you like, for our reserves, there's certainly things like the transition reserve, which could be repurposed at some cost to the council's plans, has to be said, but could be repurposed if needed. In terms of our projected position, we are where we thought we'd be when we set the budget for the current year. So we are in line with our medium-term financial strategy. So I believe we're on course with that. And lastly, there hasn't been any change in the regulatory and control environment, which leads us to change our opinion on the going concern status either. So for those reasons, that supports the conclusion we've arrived at. Thank you.
Yeah, that's really clear. Any questions?
On page 163, paragraph 5.7, I wonder if you can explain where money taken from reserves to balance the budget must be repaid. Is there a specific time when that demand must be met?
Thank you. Yes, so we used £9 million of our general fund reserve to balance the position in the last financial year. And then we set out in the budget published in, I think it was March the 1st, or approved on March the 1st at Cabinet, the planned process by which we would build those reserves back up to an appropriate level. And that's basically a 3-year period. So that's consistent with sort of financial thinking in terms of what constitutes the medium term. And the plan in the budget is that £3 million can be replenished to that reserve over each of the next 3 years. And that, just to be clear, that includes the 21-22, so the current financial year. That's the first of those 3 years. So by 23-24, we'll have built back up the reserves within an appropriate time period.
Thank you. And just whilst we're at it, the committee is due to end in a quarter of an hour, and unless the committee agrees, it has to end. So could I ask a seconder to agree to extend the committee by up to 30 minutes? Therefore, the committee must finish no less than 9:30. Yeah, we've got plenty of seconders there, so we'll carry on until past. Thank you. And thank you for your explanation on that one, Andrew. May I just ask a brief factual question, firstly on paragraph 5.5 on the collection fund, where you say LBN share 76%. Is this to do with one source collecting these on behalf of multiple councils, or what did the share mean there?
It relates to the GLA, so the Greater London Authority. Obviously, that's a precept on council tax bills which we collect, and then we will hand that back over to the GLA to fund their activities.
So, what does this probably just more from my understanding? Forgive me. In terms of 76% there, and the 9 million would refer to.
Sorry, the 9 million is the 76%.
In the GLA collection fund? No,
sorry. Where we're responsible for collecting the council tax on council tax leaflets, 76% of that relates to the London Borough of Newham, with the balance being the GLA precept, and our collection fund deficit on council tax was 9 million.
Okay, is the GLA shortfall, was that funded by their own grant receivable?
Was the GLA just if I can just invite Ekbowers, it's got the detail on this one. Can I invite him to answer that point of detail?
Sorry, Chair, can you repeat the question for me, please?
So it's just my understanding in terms of what the percent shares are referring to in these collection fund losses.
So on the council tax, the amount we collect is both for the council share and then the GLA precept share. 76% is ours. The difference is the GLA's. On business rates, the amount we collect is shared between central government, GLA, and the council. And so the figures that are quoted on there are the total losses on the collection fund. So 76% of the 9 million would be just under 7 million. That would be the council's share, but we would have to collect all of it and pass over the difference to the GLA. Hope that answers the question.
Yeah, I think that's much clearer.
Sorry, Chair. Thank you.
Yeah, no, thank you. And just in terms of, because they should receive, say GLA should receive their grants for the shortfall, shouldn't they? For their share of the shortfall, they should receive their own grants. There's no risk to the council of having to make up the shortfall for GLA in the event that their grants.
It's correct. There's no risk to the council to make up the shortfall.
So, for example, on the council tax, the compensation grant we would get, we would have to sort of pass the proportion of that to the GLA. So, so on council tax, for example, 76%, 75% of the compensation that we get, there is a bit of loss in there. That loss will be again shared between the GLA proportion and the council too.
Okay, thank you. I wonder if a note in the accounts might help just clarify those movements. We can take that offline, but I think some narrative around what's going on there would be transparent.
Yeah, we can add that. I mean, essentially, it's just an agency relationship. So we collect money on behalf of the GLA and pass it on to them. They bear all the, for their share.
The grants losses, yes, is the additional complication to that principal agent model, isn't it? Yeah.
So in the statement of account, the collection fund section does cover that, and there are some narrative bits that explain some of the percentages. But we can have a look at that and expand on it and clarify if required.
Yeah, just that COVID aspect to it. Thank you. Neil.
Yeah, you stole my thunder because I had this problem about 5.5. But I mean, it does indicate, I think, that it says the largest increase in reserves is due to the new collection fund reserve, holds fund reserve from central government to cover that shortfall. I get that. I'm glad of the clarification because I was a bit confused what that meant. But then in 5.6, the loss of income generated through local taxation is obviously one of the greatest risks. We're in a global pandemic, for goodness sake, and people on furlough, etc. But the ongoing financial resilience, this reserve will allow the council to mitigate against some of that risk. Is it cross-referenced in the next report? I couldn't see it.
It should be, this is at 5.6, it should be explained in the draft statement of accounts.
That's what I mean. I'm just seeking a reassurance now because it wasn't that clear to me, but whether I think it's Ekwal or David or Andrew.
So cross-linking it to the note 10 within the accounts. Yeah. Note 10 is the overall reserve position. That references that particular reserve, and there's a explanation to the reserves that provides a brief explanation of what that particular reserve is for and how it will be used.
Sorry, Conrad, your hand's up.
Well, so just to expand on that, I was going to pick this point up on the accounts, but we might as well deal with it now. A sort of anomaly in the accounts, and I emphasise this is a sector level anomaly rather than a Newham anomaly, is that some of the business grants in relation to pandemic support for the 21-22 year were paid last year by central government. So you have this sort of apparent increase in the collection fund reserve, all it really is that we got some cash early that's in the process of going out to support local businesses and so on. So it creates this rather distorted picture that doesn't really reflect the actual underlying pressures that we faced this year. But I mean, this is a feature in every local council's accounts. Be glad, if when we're in Westminster, where the business rates base is so significant, for example, it's entirely distorting our accounts. So you're right to highlight it, but it is just a temporary anomaly that will feed its way out of the accounts.
Yeah, because it came in before 31st of March, and all of your tax revenue losses would have been in this FY. Yeah, which understood. Thank you.
Thanks, sir.
Okay, I think we're just asked to note that. We're asked to approve it. Let me just check. Are we, can by show of hands for those present, is the report agreed? Thank you. And then we move on to the draft statement of accounts, and our role is effectively to agree to sort of effectively pass it on for external audit. But could I invite officers to Conrad or Andrew to give us some opening remarks?
Well, let me say a word or two, and then perhaps bring others in, because it's sort of very easy would be very easy for me to sort of take the credit for what you have here, but I mean, it's absolutely nothing to do with me at all, really. It's Andrew and Mainio and Ekval and the finance team and officers across the council who have the accounts here. You've heard from me why the progress that's been made in previous years, and reflecting back on the situation I found when I joined Newham 2 years ago. We had open accounts, queries on accounts going back some considerable time. We were several months late with the filing of the draft accounts, let alone the audited accounts. What you have now in front of you, that I am confident, due to the hard work of others, not myself, is a high quality document. It's also 1 month ahead of the statutory deadline. Certainly in conversations I've had with officials at Ministry of Housing, Communities and Local Government and Treasury and the National Audit Office, that would place us some considerable way ahead of the curve in the sector. We're not the earliest. It's not a race. It's still important to get the quality right. But I think a number of officers that I've named, 3, but really it does go much broader and deeper than that across the council. Really, should get significant credit for the job that's been done to produce these accounts here for you today. So I would like that noted if possible, please. I'll hand over in a moment. I suppose the other point, well, there's 2 points I was going to make. One was the anomaly that we've just discussed in respect to the collection fund, so I won't repeat that. And the other, I think Andrew has said it, but just to emphasise it again, as well as the important technical document, and there's a wealth of information in there, that I urge members to read, and hopefully we've summarised it quite well in the narrative as well, but you'll have your views on that. I do think the sort of underlying story is important to draw out from this, because the last year was a year like no other, and what the accounts show is how the council took the decision to support vulnerable residents in the way that it did, using, if I put it that way, some of the rainy day money set aside precisely to cover us for contingencies like this. And as Andrew said, the results last year sort of bear out that we spent in accordance with our plans, even though those weren't the plans that we originally budgeted for before the pandemic struck. Of course they weren't. And as you know, we've now set a budget to restore those reserves to a position that would enable us to react in similar fashion again, were anything else like that ever to happen, although of course one hopes that it wouldn't. So I just wanted to again to commend the work that's been done on this. Very much welcome comments and questions, but also I think it's important that people see this not just as that technical document. This is the document of record for residents that shows how the council responded financially to the pandemic, and I do think it's important to bear that in mind. With that, Andrew, could I perhaps hand over to you and the team just to highlight some of the key points in the report and the accounts, please?
Thanks, Conrad. I don't intend to really say very much apart from to thank my team. So both Akbar and Menya and all the members of the team underneath them. They've worked really hard, and indeed all the finance service pulled together on these accounts, and they've had a lot of engagement from officers from across departments. So it's a whole council effort, and Menya, who's our head of finance for financial control and started as appeared at audit committee before, but started just a few months ago. She will take you through the accounts now. Thank you.
Thank you. Manya Hall, Chief Accountant and Head of Finance for Financial Controls. I suppose, yes, it is a fairly dry document, but if I draw members' attention, I suppose, in terms of the actual cover report itself, as Andrew said, there was a £9 million overspend this year, which came out of general fund reserves. But again, that's sort of reported back in January as part of the month 9 reporting. But a lot of assistance given to businesses and local residents, much of which was funded by central government, but not all of it. In addition, the HRA was underspent in year in terms of its business by £3 million, but we've had to make a provision of £12 million to cover amounts that may be needed to be repaid to some tenants in relation to Thames Water discounts. There have been several legal cases against London boroughs, and it's gone against them. So we've making this provision, and we're still for any refunds that we are due. The dedicated schools budget is in deficit this year again, in the order of around £7.5 million, and this is mainly due to the high needs block overspending, dealing with those with special education needs. Again, this is not unusual, it's a national issue, especially with SEN and with the schools budget being in deficit. So it's taken total deficit to over 15 million. Now, what you will see when we come to the movement in reserve statement is this is actually moves from it being usable reserve to an unusable reserve, and in line with SIP for guidance. But I'll talk through that in a bit. Then the other issue to raise is within the single entity on the balance sheet, the pension fund liabilities have increased by around 316 million. This is due to changes in the financial assumptions. So you're looking at a 1% change in a number of the assumptions has caused a massive movement in the pension liabilities this year. And also there's been the liabilities have also increased because of the reductions due in the market due to COVID. So we're hoping that will come back, but the other assumptions sort of won't probably bounce back as quickly. And the other thing I'd like to highlight is the council's incurred an additional £163 million worth of new capital investment last year, mainly around housing and regeneration, and the bulk of which relates to the housing revenue account and investments Poplo made in terms of the regeneration. Now, the primary, sort of talking through the actual statement of accounts, the narrative report starting at page 171 of your pack actually picks up some of the information that's regarding the outturn, and also is forward looking, so covers some of the things I've already mentioned. And then the primary statements, the comprehensive income and expenditure statement and the movement in reserves and balance sheets are on pages 182 in your pack. So the CI comprehensive income statement shows a deficit of over 102 million, This is not what you'll see in the actual outturn report, because this includes a number of technical accounting adjustments, which are then shown in the in note 8 later in the accounts. And the movement in reserve statement, as I said, shows the transfer of the dedicated school budget from usable to unusable reserves. And then also so at the end, we've got the group balances. And I suppose in the balance sheet highlights probably better the single entity, as in the London Borough of Newham, and then the group balance sheets on that. Popular have spoken about their governance arrangements and their balance sheets. And also members will recall approving the accounting policies which haven't changed, and they start on page 187 of the pack for the accounts. I think that's all I want to say on the statement of accounts. So if members have any questions, happy to take them.
Neil, thank you.
Yeah, thank you very much. Very good report, but I still needed a little bit of a cross-referencing on page 174 under other significant information. It talks about, you know, that you have to report on this, staff over 50k per annum, etc. But then in the next paragraph, the council's short-term borrowing decreased 133 million to 93 million as a result of maturity and repayment of short-term borrowing. Long-term borrowing increased very slightly from. Is there references to the terms? Because I'm banging on tonight. There's a bit of an ED fix going on here about the accessibility of the general public to know what the difference is between short-term borrowing, and I couldn't see where that was tabulated elsewhere. Is it Munir or Ekbal to answer that one? Sorry.
I think I would say, I suppose short-term borrowing is anything under 12 months.
Yeah, but I know that, but you know.
I suppose I think I'll double check in the accounts, and if it's not in there, we'll make
the glossary at the back that details these terms.
Yeah, there is there? Sorry, that's fine.
At the back end of the accounts, there's a glossary that sort of goes into a little bit of detail in terms of what some of these terms mean, hopefully in sort of understandable terms.
But more, that's just that was a style point, Luke. But more importantly, is there an explanation note on why that has happened? You know, this movement from decreasing and a slight increase in the long-term borrowing. Definitional thing. It's an explanation thing I was looking for.
I don't think there's anything in the accounts that sets that out. So it may be that we can sort of amend the narrative report and put something in there if necessary to expand on that.
Well, it's to be at a committee, Luke. I don't know whether you share that concern. You know, there should be not just a definitional thing, but about an explanation behind that movement.
Yeah, makes sense.
That's it.
Okay, Anthony.
Thank you. I am looking at page 172. You have a table looking at like last year's outturn position. And I am going to pick on an area that I'm familiar with just to get a better understanding of this. Let's take children and young people. For instance, we had a variance of 5.2 million. Did that include the savings that they were supposed to achieve in 2020, 2021?
I'll come in there, please, Chair. So, yes, it will have done. We do have coming to audit, coming to Cabinet, our July finance review. One of the reports is the outturn report, so that's a detailed description and a narrative around the outturn position. That is that's a sizable overspend against an adjusted budget, which incorporates some of the COVID funding. It's a bit of a complex picture, and we'd need to look through the outturn monitoring report. I say complex because what we sort of have to consider there were savings planned for the last financial year. Some of those savings were simply not possible given the demands on management time and just the sheer practicalities of responding to the pandemic. So there is we have considered and made an assessment about those savings which simply sort of missed and slipped in that outturn report, and those which could not be delivered due to the pandemic, because it is part of the financial pressures caused by the pandemic. But certainly within the overspend position, that there are slip savings, yes.
So therefore, the 9 million that you took from reserve covered that position. If that is the case, and I understand you correctly, I then move to page 178. Looking at that page again, the savings for 2021-22. Again, I'm looking at children, which I have some understanding of their finances, and they have an unachieved savings from last year of 2.3 million. And then it added to savings that they're supposed to be making this year, which take it to 6.2 million pound savings that they're supposed to achieve. So if I get you correctly, the 2.3 million should not be there. So can you explain? Maybe I'm reading this incorrectly.
Sorry, I'm not quite sure what the question is. So the unachieved 2021 savings remain part of the MTFS, and they are part of the savings that we are tracking through to delivery in the current financial year, and indeed, over the medium term, because the savings plans are part of our medium term plans and extend beyond just one financial year. So they remain part of the savings that we're tracking and remain in the MTFS. So
it wasn't written off there in 2020?
No, I mean, savings are intended, savings are designed and almost by definition to be made to the sort of recurring or annual budget, if you like. So they are supposed to be permanent savings. That's why we track them very closely. We need to make sure that they are resolved and pushed through to delivery so that they don't then present as a sort of recurring pressure on the budget. That's why it's so important that we really do pay close attention to the delivery of the specific actions within savings. And that's what our savings tracker, which is part of our budget monitoring process, is so important.
Chair, thank you. Thanks for the response. Chair, I would take it outside of here just to get a more detailed discussion on this.
Sure.
Thanks.
Could I ask around the pension increase in liability and what the assumptions were? Just a little bit more detail on that. And then I might follow up on that.
Yeah, in terms of the financial assumptions, it was assumed that the rates for salary and pension increases increased to, I think, by 0.9% from the previous year. So it went up from 1.9% in terms of salaries to 2.8%. And I can't remember quite the figures, but I know it was 9.9% increase in terms of those. And the discounted cash flow figure reduced. So again, that had an adverse, that's the percentage for the rate of return reduced for the pension fund, but I haven't got that one to hand, reduction, but I can let you know outside the meeting. So that was the result of the bulk of the increase in the liabilities.
If I may add to this one, Chair, I don't mean to trivialise such a large number, of course, but the key figure on the pensions really is the triennial evaluation carried out by the actuary. There are often substantial movements in the measurement of the liability on an annual basis, but it's really that underlying triennial valuation that one should pay most attention to.
And yes, my follow-up was actually going to be, am I correct? Is the triennial will be it'll be next year, won't it now? Is that right? So that's when we can sort of next come to some of those assumptions with a bit more materiality. Yeah.
It's as at March 22, that's right, isn't it? Yeah.
Okay, great. And my other sort of question on sort of movements was to do with the variance of one source and the increase in NetX. Is that due to the restructure that went on with Bexley? Or is that explained? Yeah, what explains that, or if any, what is the capturing of the exit of Bexley from one source and the impact on this set of accounts?
The exit of Bexley from one source wouldn't be a major factor in this year's accounts. I mean, as with many other departments of the council, you've seen financial pressures over the last year, you know, for a variety of pandemic-related reasons. There was, under the terms of the contract, you know, the financial settlements payable on Bexley's exit. Payable, you know, should add to Newham and to Havering and some other complexities in unwinding that. But what's really reported here is performance against the one source budgets.
Okay, and where can we see, sorry, that hit as a result of the Bexley exit costs?
So that was reported into the One Source Joint Committee. The reason I'm being slightly cautious in my language is I believe, I'm not quite certain, but I believe that was taken as an item in private under Schedule 11A of the 72 Act, which of course means that committee members have got complete access to it. I'm just conscious that this is an open meeting. So I think if we want to go into that, perhaps the best route would be if that were to be circulated to the committee with a reminder about the non-disclosure of it that exists, and then we could pick up any follow-up questions either at a subsequent meeting or outside of the meeting.
Yes, I think we shall, because my question is really as to the transparency of that within this set of accounts. I would like to follow that up in terms of testing the transparency around those exit figures and where those are visible in the set of accounts. So it sounds like we're best placed to take that in a reserved session or separate session or offline, but I'm keen to understand more about where that's reflected in the set of accounts.
Yeah, that's fine. Yeah, we can pick that up outside.
Thank you. Can I open it up again to members? Winston, thank you.
Thank you very much, Chair. Forgive me if you've discussed this already, but it's that £9 million that I want to clarify. And in draft statement of accounts on page 166, the revenue budget performance indicated it was a £9 million overspend. And under the house revenue account, that £9 million is mentioned again, which is propped up by £9 million from the budget performance. Is that one of the same amounts that we're talking about?
Yeah, I'll just, if I can respond to that, thank you. They are separate. So there's a coincidence that both figures are 9 million. The general fund overspend that we've talked about mostly this evening, that's on the council's normal general fund activities. The HRA underspent by £3 million. That's separate to the general fund. Underspent in its normal activities by £3 million. There was then a provision made, as Menia explained, against what we know there will be refunds to make to tenants and former tenants for water administration charges incorrectly applied, and that was taken from reserve. So that sort of moves the in-year position to a £3 million underspend, £12 million provision made equals a £9 million and final position on the HRA, but it is indeed separate to the general fund.
Thank you. Neil, thank you.
Property, plant and equipment is something we've discussed previously, Chair. It's about, for the first time, it's a bit like we're doing catch up on the property asset register. Now, again, there may be issues around that's on the green for obvious reasons in some respects, but in the accounts under property, plant and equipment, the note I see on page 217 talks rightly about various categories in terms of, you know, what we're responsible for and who's valuing it as an external valuation. It doesn't actually segment enough for me. I don't know whether the rest of the committee feel the same. It talks about schools and things, but I thought we did ask for more detail on what was actually not just in schools and therefore non-realisable assets for the budget, but also what is actually on our property portfolio in terms of vacant buildings or underused buildings or currently used buildings, like the one we're sitting in. I couldn't see reference to our own stock, Chair. Does that make sense where I'm going with that one? I think so. I think we did say that we wanted that segmented, right? But maybe it may not be a necessary one. It may be just an internal thing that we thought was desirable, but we don't have to report on. Can somebody clarify that?
So on page 215, there is a breakdown of property, plant and equipment between council buildings, other land and buildings, vehicle, plant, and then various other categories. That's the level of breakdown we've provided previously and generally are required to provide. Behind that sits very detailed asset registers, which we've talked about previously. Yeah. But it's probably not practical to put any further breakdown than that, what we included in note 14, page 215.
I think Neil, if you've got a specific query about, say, valuation of used versus unused.
Sorry, you have to speak up. Sorry,
you've got a specific question around a breakdown within that table on page 215. We might be able to direct that offline to the officers if you wanted to say pick apart council dwellings as to get underneath it in a little bit more detail. But I think for the purposes of the account, I think the officer suggested it's sufficient. It's sufficient. Yeah. But if we've got queries, we could probably follow up.
No, it was just because there's historic, you know, because part of the problem is in the past, people haven't looked at our own assets. And so I'm trying to square off. Is it a reporting issue? I don't think it is. But if it were to be a reporting issue under SIPFA's guidance or whoever's, that we should be upfront that we've now dealt with that. Just do you see where I'm going? Because it's been a historical problem. Does that make sense where I'm going with that, Ekbal?
I think if you're referring to
or Conrad, anybody.
That's right. There's a category in there in terms of long-term surplus assets. So possibly that category includes assets that we're no longer using and either potentially for sale. And there'll be a breakdown behind that, if that's what you're referring to.
Is it possible to add a brief definition of what's meant by long-term surplus assets? That might get us somewhere.
I'll check if it's not included in the glossary already. We should be able to do that.
Yeah. Squares it off. Do you see where I'm going with it?
Yeah, that's helpful.
So it's included in the glossary as surplus assets, but happy to take comments if that needs to be expanded.
I'll have to check. Maybe something like examples.
Yeah.
But yeah, sure. I think we've passed on that feedback.
Okay.
Just checking members on virtual if you've got any questions. No. Any other questions from members here? Okay, so I think that's probably concluded. I think we might have detailed wording suggestion perhaps on the narrative that we can pass that through. I know members, there's one or two members who have suggested a couple of small points around the narrative, but we can pass formatting type style things through as well. Don't need to do that here. But seeing no other questions, I think we're asked to agree the draft accounts and for them to be passed and submitted to EY for audit. Brilliant. So that's recommended and passed through. So thank you to officer. I think it's the third set of draft accounts I've certainly seen as audit chair, and I could definitely see that positive journey we're on. So thanks very much for, I think is a lot of progress made in terms of the quality of the council. Thank you. So let's move on to item 10, which is our year ahead plan. Page 313. This is just effectively the draft view of what's coming up. It's the pink page at the end of the pack. So the next July, we do have another meeting forthcoming in July, where we'll effectively bring back we'll see the next update on the risk register. We'll also see quite a little bit on fraud. I think we're going to revisit some of the one source findings and letter and so on. Any comments on what's ahead for the year? No. So item 11, the date of the next meeting is the 14th of July. Similar setup, 7 p.m. That's fine, I think. So I think being no other formal business, I'll declare the meeting